Hello, and welcome to Virtual Investor Conferences. On behalf of OTC Markets, we are very pleased you've joined us for the second day of the Precious Metals and Critical Minerals Conference. The next presentation of the day is from Dolly Varden Silver. Please note you may submit questions for the presenter in the box to the left of the slides. You can also view a company's availability for one-on-one meetings by clicking Book a Meeting. At this point, I am very pleased to welcome Sean Kunkun, Chief Executive Officer, President, and Director of Dolly Varden Silver, which trades on NYSE American under the symbol DVS and on TSXV under the symbol DV. Welcome back, Sean.
Thank you, Lily, and thank you to the OTC group for hosting this event and for having Dolly Varden present. So as Lily said, I am the CEO. I'm a director and president of Dolly Varden Silver Corporation. I'm going to focus my presentation today on a merger that was announced on December the 8th, a merger to create the next silver and gold producer in North America. We've got the ambition to grow to becoming a mid-tier producer. And so Contango Ore and Dolly Varden have proposed a merger, and I'll be walking you through the presentation. Contango trades on the New York Stock Exchange American under symbol CTGO, and Dolly Varden also on the NYSE American under symbol DVS, and on the TSXV under symbol DV. Throughout my presentation today, I will be making some forward-looking statements. So starting with why we're merging, the two companies have come together to create North America's next mid-tier precious metals producer. And if we look at the company's assets, we are located in a geographical consistent area. Contango Ore right now has 3 assets in Alaska, and Dolly Varden has a large holdings in BC's Golden Triangle. So Northwest BC and Alaska. The combined company will have over $150 million in the treasury, and will have over $100 million of cash flow from the Manh Choh operation. So it will be a well-funded cash flow producing producer with a pipeline of high-grade gold and silver projects in a safe mining jurisdiction. We've got a very unique business model, which is the direct shipping ore model, which I'll get into in this presentation. And we've got a lot of support from existing shareholders to move the transaction forward. So looking at the map here, which shows Alaska, Yukon, Northwest BC, you can see Dolly Varden's project here, the Kitsault Valley, which is a very special, unique project in that it is high-grade silver. So it's primary silver. And what's unique about that is most primary silver is located in places like Bolivia, Peru, and Mexico. So we're giving investors exposure to primary high-grade silver in a safe mining jurisdiction. The project is complemented with high-grade gold as well. And then looking north at Alaska, starting with the Manh Choh operation, which is producing. It's being processed at Kinross's Fort Knox operation. And then looking at Lucky Shot and Johnson Tract. So we've got a total throughout the combined pro forma company of about 2 million ounces of gold and 64 million ounces of silver. Now, there are some new resource estimates that are expected in Q2, where we can see the silver aspect of the mineral inventory substantially growing. Now, we are focused on extremely high-grade deposits. That's one of the things that makes the pro forma company quite unique. As you can see, the grades here averaging north of 10 grams per ton throughout the portfolio. And on the silver side, over 300 grams per ton. Now, we do have 4 mining districts. And so we have a wonderful portfolio that covers both development, exploration, and also production. And what this slide articulates is how the cash flow from Manh Choh, which is listed here on the bottom of the slide where my cursor's going over, we're going to leverage the 60,000 ounce a year of gold production from the Manh Choh operation, which is the world's highest grade open pit gold mine, averaging 8 grams per ton, and use that cash flow to advance the other projects within the portfolio. Initially starting with the next most advanced project, which is Lucky Shot. Now, Lucky Shot is a past producing, permitted, high-grade gold project, also in Alaska, also amenable to the direct shipping ore model. And this is essentially taking rocks, putting them into a container, and shipping them to an underutilized processing facility, much like the Manh Choh, which is moving to Kinross's Fort Knox. So as we leverage that cash flow and the strong balance sheet to develop the next project where we're targeting production in 2028. Simultaneously, we'll be advancing both the Johnson Tract and Kitsault. And the way I would describe both of those projects is they really provide growth in the company. There's going to be a strong emphasis of drilling. So we're looking at about 70,000 meters or $50 million of exploration drilling throughout the portfolio, in addition to advancing infrastructure, permitting, and studies. You know, one of the big compelling components of the merger is creating a larger entity. And that larger entity will give investors more liquidity. We've already seen for both companies individually, pre-merger, liquidity has gone up dramatically. We're seeing share price appreciation. We're seeing a lot more trading volume. But what I want to focus on is what the companies are going to look like post-merger. Now, there is a vote for the merger on March 17th at 10 a.m. We've got, as I mentioned earlier, we've got voter support agreements from strategic shareholders. There's a tremendous amount of support for this agreement. And we suspect that by March 26th, the merger will be complete and will be trading under the symbol CTGO. The new name for the pro forma company will be Contango Silver and Gold. The company will have less than 31 million shares issued and outstanding. And based on our institutional and strategic shareholders, which include Franklin Templeton, Fidelity, BlackRock, Eric Sprott, about 50% of the company is in hands of either management, strategic shareholders, or institutional investors, leaving only 15 million shares in the hands of the public. We've got currently we have ETF and index inclusion, GDXJ, SILJ, the Russell 2000, and we have modeled about $50 million of index and ETF buying on the merger. We are currently covered by 9 analysts. We've listed the analysts, and they include companies like Canaccord and Haywood, Cormark, just to name a few. Now, this is one of my favorite slides in the presentation. I think this really articulates the opportunity for investors. And that opportunity is we're in a market right now where safety, security is of the utmost importance. And really the combined company, the new Contango Silver and Gold, is really only going to have one peer, and that's Hecla Mining, a company that's valued at roughly $20 billion. And Contango and Dolly Varden coming together represents $1 billion market cap. So there's a lot of room for us to grow as we continue to advance our pipeline of projects. And what we're offering investors in the new Contango is exposure to North America's premier gold and silver producer, And I want to emphasize that pipeline of projects like Lucky Shot, like Johnson Tract, like the Kitsault Valley. It's a unique portfolio. It again incorporates 4 mining districts, and it sets ourselves away from many peers. Again, these are high-grade projects. They're in a safe mining jurisdiction. We've got cash flow, we've got the development pipeline, and we've got a lot of upside in the exploration portfolio. That exploration portfolio in the previous years has generated some very impressive drill results. It's made Contango and Dolly Varden, respectively, one of the most successful explorers in the marketplace, as this slide articulates, having some of the best silver and gold drill intercepts in both 2024 and 2025. Now, this slide only focuses on the last 2 years. If we brought in 2023 and 2022, even 2021, we would also demonstrate some of the best top 10, top 15 drill results in the sector. And as I mentioned earlier, with 70,000 meters of exploration drilling, with a $50 million exploration spend, I suspect that 2026 is going to have us in the top 10 for drill results. And like, focusing on some of these numbers here, on a gram meter basis, we see numbers here that exceed 30,000 gram meters on the silver side. They are up to 2,000 gram meters on the gold side. So these are very unique, very high grade projects. This is the new board of directors for Contango Silver and Gold. This is the C-suite here, led by our CEO, Rick Van Nieuwenhuizen. Rick started Nova Gold back in 1999. He ran Trilogy. He's had a successful track record of creating a lot of shareholder value, specifically in Alaska, where our cornerstone, our foundational assets are. I will be a very active president, supporting Rick and the team, Mike Clark at CFO, and then we've got a very strong and experienced board. Taking a bit of a deeper dive into the portfolio, first focusing on the Alaska side of the portfolio. As I mentioned, we've got the Manh Choh operation, which is a very unique operation. This project, within 3 years, went from feasibility to production. It's quite unheard of. And I'll tell you as I go into more slides here how that was accomplished. But the ore is being trucked 240 miles to Kinross's Fort Knox facility. And the production attributed to Contango in 2025 was 60,000 ounces, or is $102 million in free cash flow. All the numbers today I've quoted are in US dollars. And again, as you can see here with some of the price assumptions, looking at this project through a $3,200 gold lens, we've got very conservative estimates of future cash flow. Looking at the next project in the pipeline, this is a company that is very interested in moving projects that are advanced, that are permitted, and into production. So the next one here is the Lucky Shot, which is located just to the southwest. And the target annual production initially from Lucky Shot will contribute 30,000 ounces. So we'll go from a 60,000 ounce a year producer to a 90,000 ounce a year producer when Lucky Shot comes along. Lucky Shot is a $50 million spend to bring it back into production over the next 2 years. That can be generated from internal cash flow and from existing cash on hand. So it's the timeline there is again 2028 for production from Lucky Shot. So we'll have 2 mines in production. And then the Johnson Tract project, which is a very special deposit, because of its grade and its size. It's measuring over 1 million ounces of gold equivalent at over 9 grams gold equivalent. And again, some of the numbers here were based on studies that were done with very, very conservative gold prices. If we were to look at even $4,000 gold, we would see a tripling of the NPV and a reduction of the payback period to less than a year. So these are high grade. They're all very close to infrastructure, whether it's putting projects on a barge, on a rail line, or on the back of a truck. They support the DSO model. And that DSO model is taking high-grade ore. It only works on high-grade projects where there's no need to build a processing facility or permit tailings. That saves time, it saves money, it's better for the environment, it gets a lot more community support. And the proof of concept has been proven with Manh Choh, and the next project where rocks will be put in a container and moved will be Lucky Shot. And again, just looking at the Alaska portfolio, we can see where the companies come from in 2024, where we see the company over the next 2 to 3 years. Again, with the introduction of Lucky Shot, it gets us to a 100,000 ounce a year producer, factoring in Johnson Tract, which could be in production before the end of the decade, gets us to 200,000 ounces a year. Now, bringing in the Dolly Varden portfolio in Northwest BC. So looking at the Golden Triangle, which is a very historic area, there's been modern large-scale precious metals mining operations for the last 100 years. In the modern era, you've got Newmont operating the two big mines in the district. So a gold-centric deposit called Brucejack and a copper project called Red Chris in the north, again, both operated by one of the world's largest precious metals miner. Dolly Varden has a land package that rivals Newmont. That includes 5 past producing high-grade silver mines. Again, the Golden Triangle is home to over 150 million ounces of gold, over 1.2 billion ounces of silver, and it's in its infancy in terms of discovery potential, due to the fact that until recent years, it lacked infrastructure, which has come in with the mine opening at Brucejack in 2017. Community is very important in Alaska and British Columbia, and the Nisga'a Nation is a very, very supportive stakeholder in Dolly Varden. Dolly Varden has recently celebrated a lot of exploration success. Rick and I often talk to our shareholders about Contango having a very, very solid 5-year plan, but with the introduction of the 100,000 hectares of ground in the Golden Triangle, which include the 5 past producing high-grade silver mines and the modern resources, we now have a great 20-year business. And again, the deposits here are globally unique. They're primary silver, exceptionally high grade. We've seen a tremendous amount of growth in recent seasons, and it is why we are putting out a new compliant resource estimate, and that's targeted to come out sometime between April and May. Again, I just want to focus on why we're bringing these two companies together. We are creating a mid-tier North American silver and gold company, re-emphasizing the exposure we're giving investors to cash flow, the leverage to these high-grade, globally unique projects, 4 mining districts. And again, one thing that I've learned, working in capital markets in the mining industry for the last 2 decades is size matters. And, the increase, research coverage, institutional ownership, liquidity, the greater scale is the big opportunity. So I really appreciate everyone's time. If you want to learn more, I would drive you to Dolly Varden's website, Contango's website. You can learn more at dollyvardensilver.com. You can email us. You can follow us on social media. I think at this point, what I'll do is we've got a number of questions that have come in. And so I will draw my attention to some of these questions. So I've got a question here from Pete. I've got a question here. I like the proposed merger. Are you getting any pushback on the merger? Any misconceptions? Sorry, I've lost the question here. It's jumping around here. Any misconceptions about the combination? Thank you. So, are we getting any pushback? Overwhelmingly, I would say 97, 98% of the feedback that I've received on the Dolly Varden side has been very positive. I think that the general consensus is anytime you can move from exploration into operations, it's seen as very positively. I look at very successful and astute investors, people like Eric Sprott. Eric is a 10% shareholder of Dolly Varden. He has signed a support agreement. He's supportive of the transaction. And, for Dolly Varden shareholders, we are buying production. We are getting exposure to high-grade gold in a safe mining jurisdiction. We're getting exposure to a seasoned, experienced management team that has successfully made discoveries, advanced those discoveries through development, permitted them, and most importantly, brought them into cash flow and production. That's what our project needs. After 5 aggressive years of exploration-focused drilling, where we've made discoveries, we've made accretive acquisitions, it's time now, not only because of the size and scale of the project, but also the price environment. When we at Dolly Varden started this journey, silver was $16. It's significantly higher today. It's been as high as, it's been up to about $120. So in this price environment, I think it's time to move from explorer to producer. And Rick and his team have the skill set to advance this project. So I've got another question here. With the merger of equals now formalized and the exchange ratio set, do you see scope for additional strategic or financial partners to join the register on improved terms versus what either company could attract standalone? That's a great question. And I think the answer is yes. And I think you're seeing it with Contango's announcement today, which has attracted, two strategic investors who've come in and announced a $50 million funding. So I think, not only do we envision more of it once the merger is complete, but we're actually seeing it leading up to the vote. Let's take a look at some of the other questions here. There's many that have come in. And we've got a question here. Can you talk a bit more about Alaska as a jurisdiction? Has the state or U.S. federal government level permitting backdrop changed in the past 12 to 18 months? So Alaska has always been one of the world's premier top jurisdictions for mining. There's a rich history. If you look at the landscape today, whether it's Kinross, whether it's Hecla, some of the biggest and best mining companies globally have been mining in Alaska for decades. I think there's a tremendous opportunity from a geological opportunity, and similarly to BC, because of its previous remoteness, I think there's a tremendous opportunity, unlike some other districts, throughout Canada and in the U.S. that have just seen more mining history and a more history in terms of exploration. But specifically, your question around has the political environment changed in the last year and a half? And I think what I'd point to is Trilogy, a company that Rick ran for almost a decade, which was one of the recipients of a direct investment from the US government. Not only a direct investment, but help with re-permitting the Ambler Road. So I think we're in an administration right now in Washington that is pro-mining, pro-resources, is very, very favorable specifically to Alaska, validated with that direct investment. So I think, the U.S. is a premier destination, and Alaska within that union is one of the top jurisdictions. And again, it's one of the reasons that compelled us as we look to grow, as we look to partner at Dolly Varden. Not only is there a geographical consistency in Northwest BC and Alaska being neighbors and contiguous, but the fact that we've seen this appetite from the U.S. government to forecast hundreds of billions of dollars of direct investment into mining companies, and specifically one of those recipients being in Alaska, is a big part of the reason that compelled us to do that. I've got another question here. Both Dolly Varden and CTGO are acquisitive companies combined. Can you speak to your next M&A target, say in 2027? What metals, in what jurisdictions might you pursue to become a mid-tier producer? I think if all we did was focus on our existing portfolio, I think we can meet that objective of becoming a mid-tier producer organically. The genesis of the merger, both companies were researching and looking to acquire a processing facility. So I think one of our number one objectives, and it's not to say we couldn't even accomplish it in 2026, is to secure a processing facility. Now, there are multiple idled processing facilities in British Columbia, and I think that would be the number one objective. And again, we have a tremendous amount of organic growth just moving our own projects through the pipeline. However, both companies do have a number of targets that we'll continue to monitor. The key for us in the short term is to have the merger complete by the end of Q1, by March 31st, and then get into Q2, get into April 1st, and get a re-rating, which we think will initially be propelled by the indexes, the ETFs, other institutions, to go out and share the value proposition. And again, because 50% of the company is held by strategics and institutions with only 15 million shares in the float, we've described this business as a rocket ship. And I think there's a tremendous opportunity. Today's announcement with the $50 million funding and specifically the use of proceeds, we are giving investors more exposure to the big move the gold price has put on here. So I think there's a huge opportunity to share this value proposition. What's really interesting is both companies have two very, very different groups of shareholders. So I think there's an opportunity for Rick and I together to get out to that shareholder base and to have them understand the rationale. And many of them have already supported, as we've seen with today's financing, with the share price appreciation in the open market, and to continue that, to go out and talk to new shareholders. And maybe we have time for one more question. So I see a question here. If I invest in DV tomorrow, do you know how the existing stock will be converted into the new company stock ticker price? Thank you. The way I would describe this, so there is a presentation on both companies' website that talks about the exchange ratio. The way to think about this is Dolly Varden right now has ranged between $4.50 a share and $5 a share in US dollar terms. If you own 10,000 shares of DVS, you will get about 1,650 shares of Contango. The exact number for 10,000 shares is 1,652. Contango shares today are trading around $29 a share. So you will have a $29 share price. That will be the primary listing. And I think with that, we're completely out of time. I just want to thank everybody again for their time, their questions. I know there's a number of questions we didn't get to. We will be provided this information from the OTC group, so we'll reach out to you individually and answer these questions. In the meantime, I would encourage you to go to our websites. There's contact information. Feel free to reach out to us. We're happy to hear from you. Again, thank you for your time. And myself, on behalf of myself and Rick, we are really excited about this opportunity to build what could be a $5 or $10 billion company over the next few years.